Hello, everybody. Thank you so much for the patience. I know it's 9:02 here on the East Coast. We're supposed to get started at 9. I know it's the evening, and this is a evening stream. Usually you guys see me on the market hour stream, so I'm really excited to do the evening stream for anybody who joined today's Power Hour. I know we talked a little bit about what we're going to do today, but for those who are getting here a little bit early, we are doing a basic and advanced concepts regarding day trading. And one of the most important things I think that everybody should be aware of is that we already have done one of these sessions before, and we have it recorded. And a lot of those concepts regarding kind of the charting setup, higher highs, higher lows, lower highs, lower lows, we've gone over those things before, and would be a great precursor to the lesson that we're going to be doing today. If you guys have any questions at any time, if you want me to break it down a little bit more, maybe I'm a little quick on some of this stuff, just let me know in the stream chat. But I do see some people flowing in here, and it's great to have you guys. Thanks for coming out and taking your evening here to learn with me and to better yourself as a trader. Again, guys, today is going to be all about day trading. So we're not going to do too much, swing trading. I know I have the ES chart up right now, but we are going to be talking about day trading. Let's give it just one more minute so our fellow Eagles can join us, and we'll go ahead and get started. So thanks again for joining us, and we'll go ahead and get started soon on our day trading basic and advanced session. Just quickly before we start is, we're often using a lot about what we're going to talk about today live on the streams. And if you're joining today, I really appreciate it because it's going to give you more information on how you can use the day trading alerts as well as the Eagle Investors Day Trading live stream to your advantage. And I think that's one thing a lot of people attend, and I encourage you to continue to attend it, especially if you're interested in day trading. We have a goal here by end of month is to get pretty much all the streams for Diamond that there's active day trades and scalps being taken. Obviously, we can never force trades, but if we do have a scalper or a day trader there at all times, I think it'll be a good it'll be a good addition. So keep that on watch. I do see somebody asking in the chat if the tutorial will be recorded. Yes, it's recorded. We'll go ahead and send it in the chat. And one more time is that after the lesson, I'll go ahead and send the precursor video to this one where we did the basic strategy regarding day trading. And again, many of you have probably watched that. If you haven't watched that, just be on the lookout. I'll get somebody to send the link in the chat if possible, so you guys can watch that after the stream to maybe learn a little bit more and get some more depth, especially on the more basic stuff. So again, guys, I appreciate you coming out today. There's a few things that I want to go over. Many people ask why should you day trade? Why not swing trade? Is at the end of the day, in my opinion, and the advice that I give people who ask me individually if I should be a day trader or a swing trader is, what is your schedule like? What is your lifestyle like? Because at the end of the day, I would deem day trading more as a bit of a lifestyle, because the market moves, and you got to be aware of that. And if you're day trading, you got to kind of be there when the market is moving. And the difference between a day trader and a swing trader is, number one, a day trader doesn't have to trade every single day of the week. A swing trader, in my opinion, you have to keep monitoring your trades and make sure stop losses aren't hit, whatever it may be, and that requires you at least check your phone or check your laptop 1 to 2 hours a day, or and to monitor your positions. Especially if you're trading options, you're going to want to do that actively. For a day trader, however, you might just want to show up on Monday, Wednesday, and Friday because there's 0 days till expiration options, right? Or you just show up on Tuesday, Thursday because your strategy likes non-0 days till expiration. Whatever it may be, that's kind of the general advice. And I get that question a lot, is, Sean, what kind of trader should I be? Should I be a swing trader? Should I be a day trader? Is there room for me to do both? And I think at the end of the day, you should survey yourself and say, okay, do I want to take full days off? Because that's the benefit of being a day trader is some days you just don't have to trade. You don't have any risk overnight. I think that's a big appeal, is people swing traders can be a little stressed out sometimes. I've been stressed out as a swing trader, watching futures, watching the price action of your swing trades after hours, especially if something's near a target, right? So that's one of the benefits there of day trading, is that once the market closes, you don't necessarily have to have any risk on the table, right? And that's a big benefit of being a day trader. But I'm not, again, knocking swing trading, it's just a different lifestyle, right? So you as a trader have to decide, if you're up to that lifestyle. At the end of the day, when you're day trading, you need to be in front of the computer for the entire time you're trading, or during the market hours. Whereas when they're swing trading, you can go into the other room and go do something and then come back, every 1 or 2 hours. So it's not as necessarily active when you're there, but the duration of your activeness in terms of consistency needs to be there on swing trading. Whereas day trading, you can take a day off. You just don't have any risk on the table, so it's no problem. You're just cash, and cash is a position when day trading. So again, guys, this is going to be a little bit more of an advanced session tonight, where we're going to talk about an extension on the first video. And in the first video, and I'll just pull up the Piton chart because this was the trade of the day today from Eric. And Eric had a really nice call out here on Piton calls right around here this morning. But I just wanted to show it as an example because this was very similar to the Amazon chart that we analyzed while it was moving in the first session. And why do I say that is because I see a pretty noticeable pattern here. And I'm sure this is why Eric was looking at it too. But right now, and what we saw pretty much all morning here on Piton was higher highs and higher lows. And this is something that you'll see us talk about many times in the chats. Is it making higher highs and higher lows? So HH and HL. This is stuff we went over in the initial session, but I just want to number one, shout out Eric for the big trade this morning. Following the higher highs, higher lows on Piton, but also just show you guys a little bit like what's a textbook day trade. This is a long day trade, right? If we we invert the charts, it could be a short, and there's many charts like that which are able to be hit. But in this case, this was a great example of higher highs and higher lows this morning here on Piton. And just to get us started, is we talked a lot about how this can be a trend, right? And this is how we're able to identify a trend, higher highs and higher lows, and how we'll be potentially able to enter a position, right? And similar to how we analyzed it last time, is say we are monitoring Piton this morning, right? So pretend like we don't know what happened. We see it come out of the gate and we see it increase. It broke the high of yesterday, right? And that's a pretty big deal. Is that the high was in and we continued higher here. And we made another leg up here. So we got the higher high and we're expecting essentially the higher low. And for those who have been day trading with us, understand that we're saying, okay, the stock now is bullish over the previous low because it made a higher high. So in order for it to have a bullish trend, we need a higher low for the higher highs and higher lows. Therefore, if Piton is going to make that higher high, it's going to bounce over the higher low, right, which is 32.50 here. And again, these are some more basic concepts of day trading there. So we'd want to buy it in this area, right? And we see it coming down. So essentially, we're cheering for those red candles, right? You'll see me say many times on the stream, okay, guys, I see, Piton made new high a day. If we see some red candles on the 3-minute chart or the 30-second chart, we're gonna look to hop in the position. And we want to buy it as close to that previous low as possible, or even the VWAP area. So you see us come up, and so this would be our entry opportunity. So we'd enter the position, and we won't talk about the average zone yet. That's going to be a little bit later on in tonight's presentation. But if we do get in here, you do see it made a higher low, and it resulted in the higher high, right? And then we actually came back down, and we made another higher low here, and we continued, and once again, we made a higher high. At some point, the trend had to tire itself out a little bit, and that's one important thing that I've been saying recently is that the longer the trend goes on, the less likely it is to continue. And as you can see here, as the morning volume subsided, I know Peloton was up, almost 30%, if not 30% on the day. The buyers did, they started taking profits, and throughout the rest of the day, we did come down. But luckily, Eric was able to take our profits, very viciously in the market this morning. So essentially, this was a beautiful chart here this morning, guys, of the higher lows and higher highs on Piton. But I want to show you today about dynamic stop loss management. This is something that I use very frequently in terms of management of the trade. And we talked, last time in the session a lot about entering a position. What to look for when you enter. Higher highs and higher lows, and lower highs and lower lows when you're going short. So therefore, what we want to talk about a little bit more today is getting more in depth about once we get into the trade, how do we manage the trade? Because many times I see traders who are either following the day trades, trying to learn more about the day trades, is that they may take profits a little bit differently than the person signaling, sometimes for better, sometimes for worse. But I wanted to offer you a little bit more insight about what has worked for me the best, because a lot of people ask me, hey, Sean, how can I hit the 100% to 300%, to 500% gains. How is that even possible when I stand to lose and I don't know that something's going to occur, right? And today what I'm going to do is I'm going to unlock a strategy for you, where I use dynamic stop loss management on top of the strategy that we've already been talking about, and teach you guys how you can potentially put yourself in a position to hit 100 to 300% plus while buying options while day trading. Obviously, there's no guarantee with that at any time, right? Sometimes you'll win, sometimes you'll lose, but at the end of the day, you have to be able to put yourself in a position to potentially find 100 to 300% gain. And we taught you guys how to fish a little bit and go and find stocks, right, that might be moving, right? Higher highs, higher lows, lower highs, lower lows. But in order to maximize our profits, and a lot of people say, hey, Ishan, why do you do runners, right? Why do you go out of half the position? You'll stop out of half the position, then stop out of the full position, or you'll take price target, you'll exit for profit on half the position and then wait on the other half of the position. Sometimes that half position will go against us and go to break even, but sometimes that other half of the position can go up to 100%, 200% gain, right? And keep in mind how options trading, how I like to trade options is that, we might take 25%, 35%, we try to keep them under 30% losses usually, unless there's zero DTE. But if we hit a 300% gainer, right, or a net 200, 250% gainer, that makes up for 5, 7 losing trades, right? So based on that, right, we could have 10 trades, and if we're hitting nicely on 3 trades out of the 10, the way I just explained to you, we could be in very nice profits. And I know I talk about that with swing traders a lot. Now the best option traders on Wall Street usually buy options, but it goes for debit and buying day trades as well. And that's what the strategy with day trading options here is that you do have the potential to hit those big numbers if you use dynamic stop loss management and kind of just dynamic management in general. So let's get on to what this strategy is, right? Because I think it might be, you guys might be wondering, okay, so how can I hit this 100 to 300% gain? And what I would like to say is so number one, this is a 100% gain trade. Not all trades are going to be like this. Some things will run in your favor, some things won't go in your favor, right? You want to cut those losers short. You want to let those runners, you want to let those winners run. And why that saying exists is because if you let your winners run in options, especially if you're buying options, you have limited loss, right? Because your loss is the entire premium paid. But if you have something like a call option, you actually have unlimited reward, right? So keep that in mind, is that with that unlimited reward potential, we want to make sure that we capitalize on that as option traders, and we don't take our profits necessarily too quickly when we do have the potential to make larger gains, right? And I think that's what we want to discuss today is, okay, maybe you're making some day trades here, you're going up 20, 25%, you're going down 10%, and you're making these smaller moves, but how can you get to those 100%, 300% more volatile contracts and swings? Essentially, let's talk about the dynamic stop loss management. So as we were saying, you see the higher low and you see the higher high here on Piton this morning. And I know it's and we'll zoom up a little bit here. Let's zoom up. So as Piton is moving this morning, we saw the higher low, right? And we saw the higher high. And say we entered the stock right around here, looking for a bounce, above the VWAP area, right? For a test of the high a day. And we're looking and we're saying, okay, we're getting in here and we're looking, our price target one is the high a day, right? So it's right there around 37, right? And our stop loss would either be the VWAP area, right? Sometimes we keep it a little tighter, or we could keep it a little looser, 32.85, and have that average zone, which we'll get into a little bit more. But say we went ahead and bought Piton here, which is what Eric did this morning, right? He said, you know what, I see the strength of Piton. I saw some good stuff over their earnings that at least investors are reacting positively. He had some indication, right, including maybe the software to get in the position, right? So you guys have learned a little bit about how to identify these situations. We hop in the position here, right? We go up and we go up and we hit the price target, right? So right here, as we've trained, right, within our strategy, is if we buy in here, and let me just label it quickly, is we're going to have our stop loss, and we'll label it orange. And then we can also even have our stop loss at VWAP, right? It depends kind of on what we would decide. And then also we have our price target, which is the high a day, right here. So if we have the high a day as the price target, we came up, and we're talking about a winning trade, right? I'm trying to teach you guys how to let your runners run. And this is a winning trade. Not always will you go up and you'll hit the price target, right? You could hit the stop loss and it's a losing trade, right? We have to get out of that. I hope you guys know that by this point, but now we'll go up to the price target and say your price target hits. So as this happened right here, you'll see, Eric was saying, okay, we'll take our 1/2 profits, right? And you'll see me on the stream as well saying, okay, guys, we'll take our 1/2 profits right here as our price target is hitting, right? And in many occasions, right? I think if anybody was in those SPY calls with us during Power Hour this morning, we got the new high a day. And as soon as we hit the new high a day, we took our 1/2 profits, right? And that's called taking our profits viciously as the price target hits. And what I keep saying is that, it's, in my opinion, guys, it's greedy to not take the full position, not take half the position at the minimum when the price target hits, right? We want to run with a partial on our position because we want to take a winning trade and we want to let a green trade stay green, if that makes sense. So we'll go ahead and we'll take the price target here. And in many occasions, and I'll use an arrow to show this, you'll see, the stock go down drastically here. And we'll test the stop loss or we'll do something. In that case, right, we have this higher low here, right here, where you would say that's the higher low. And that's one thing that we want to, just be careful of here is that, things don't always work out, sunshine and roses when day trading. For those who are here during Power Hour today, we came up here on the SPY and and I know this is Piton, but I'm just using it as pretty much an analogy here. We came up and we made the higher high, right? And we took our profits and we made, a nice 20% or so on those contracts. And then we kind of immediately flushed here down towards this area, right? And the contracts and the profit pretty much evaporated, right? So that's why it's important to take your profits viciously, right? Is because there's never a guarantee that you're going to continue to run. That's why that's why the strategy says the price target one, once you buy the dip, is the high of day, right? For those people who want to start hitting those larger trades, right? The only way you can do that is to let it run past that high a day, right? Because you want to let your runner run. And how you do that is that so you let it run and you see the break of the high a day, right? As soon as you see the break of the high a day in the price target, you take your 1/2 profits, right? Then what you do is you bump your stop loss up. So as you guys can see with our original trade, when we hopped in, our stop loss was VWAP, maybe for 1/2 the position. So if this stop loss triggered, if we broke down the VWAP, we would sell, 1/2 the position. And then if our stop loss broke here for the higher low, right, we would sell full position. And so if that occurred right here, we go up and we hit the high a day here. So we say PT1, sell half position right here. And let me just turn that red really quickly. So that's our PT, right? So we hopped in the trade. We set our stop loss to sell half the position is VWAP. The other half is the higher low. We got in. We made the higher high. Awesome. So we sold 1/2 of the position, right? Now what we can do is we want to bump our stop loss up to around the entry, right? Because what we don't want to do now is we don't want the stock, and this can happen, guys. I'm sure you've been in situations before where this happens, where the stock just goes here and it'll go all the way down through your original stop loss, right? And keep in mind, these are options. So not only did the price go down from where you originally entered, but now more time has passed. So you're going to be in big time losses if that occurs, right? So what the key is here, guys, is to bump your stop loss up to the entry level, right? And that it's not always the entry level, but it's the most previous low, right? So what that means is we have this. So we made the higher high here, right? We made the higher low, right? Now we made another higher high. So therefore, what are we anticipating here? Is we're expecting, the stock here. We'll draw another level. If Piton wants to continue to be bullish here after breaking out of the high a day, it's allowed to fall, right? It's allowed to fall, but it needs to bounce above the most previous low, right? Because if that occurs and we bounce above this low, we have another chance to make a higher high, right? And I know I can't really chart on the screen here, but that would make the higher highs and higher lows and the bull trend still intact, right? Therefore, what we do here is we say, okay, old stop loss, that's done. What we do now is we bump our stop loss up, right? So this was our entry level, right? And let me just identify that here in green. And thanks for bearing with me, guys. I just want to make sure it's visually handy here. But you have your entry right here, right? We had our original stop loss. We broke out of the price target here. We will bump our stop loss up now, right? And what's something nice here is that the VWAP is kind of around that area, and we say, okay, if that stop loss hits, keep in mind that we only have half the position now, right? Because we sold one half the position for profit, right? Now again, guys, the only way to hit these big trades is to put risk on the table, because if we scared money won't make money, and the only way we can potentially realize gains is to put risk on the table, because if we never even try at the trade, we'll never have a chance, right? So what we do here is we keep, we stay in the position, right? We stay in the 1/2 position instead of selling at the price target, right? We bump our stop loss up here, and we'll say, okay, if the stop loss breaks here, we'll sell to close the full position, right? Because it's only half position. But we're still remaining in this half position, and we say, okay, as long as it bounces above this level, we'll maintain in this position. And what do you know? For Piton, it continued higher, right? And then we got these red candles here, right? So we actually made this killer new high. So we went boom, we broke through the price target, and we even continued higher. So as we continued higher here, as the price hit the price target, we said sell half, and then as we ticked higher, guys, we said, okay, bump our stop loss up, right? So we bump our stop loss up and we made the new high. So essentially Piton now is bullish above that previous low. And that's a long way down there. You don't necessarily have to risk it, and you can take your profits whenever you see fit, right? But at the end of the day, the only way to realize additional gains is to let your runner run, right? So if you maintain in the position, you would say, okay, I'll stay in this position unless the previous low falls out here, right? What do you know? The stock starts consolidating, the buyers step in, and we make a new high, another new high here, right? So we stayed in the position and we made another new high. So now we've gone from, $35 on the stock up to $37, right? And we took our 1/2 profit. And then now we've gone from 37 all the way up to 40, right? So almost double the profits now from the initial position, right? So, and what we were able to do is we were able to say, okay, now we have a winning trade, and we're able to bump our stop loss up so that if this stop loss was breached, we weren't going to lose as much as we would have initially during the trade. We actually would have had a net profit likely, as we would have gotten out of those contracts around break even, and we had a win on the initial half of the contract. So again, guys, this is all about managing your winners and how to have a successful trade. Keep in mind, as we continue higher, we're going to continue to have a dynamic stop loss. So we have the dynamic stop loss. We came here, we made a new low, and we made a new high a day. So as we made this new high a day, guess what? We'll bump our stop loss again to the previous low, right? So we'll bump our stop loss again here, and you'll see higher lows, higher highs, higher lows, higher highs, right? And the only way that this bull trend stays intact here is so we made a higher high, is if the higher low is here, right? Because if we break down under that level, that orange level, which I just outlined, it's a lower low, right? And that trend here that we've been watching is not intact anymore, right? So the only way we remain in the position is if we hold above that most recent low, essentially, right? And that's where we'll bump our stop loss up again, right? And the great news now is that even if your stop loss hits, since we got in all the way down here at 35, if that stop loss hits, you're still going to be in big profits, And that's the beauty of being able to bump up our stop loss dynamically as the stock is going up. And as you can see here, the stock ended up going down and breaking down under the stop loss, right? So then we would have been able to get out as we saw, this breakdown right here, and we just take the rest of our profits, right? And we take the rest of our profits, whether you would have sold, at 40 is up to you. I know Eric, was very solid, and he took his profits like right around this area, which was wonderful. But keep in mind, guys, the same for the price target setting on dynamic management goes the exact same with the higher highs. We just talked about stop loss setting with the higher lows, right? But the price target goes the same way. And I think I want to give you guys the quick example of that right now. So we got in the position here, right? So we entered here, and we exited our 1/2 position right here at the high, right? Now we continued higher, right? And we bumped, and we have our stop loss. We came up here and we said, okay, the stock is going to bounce above the previous low right here around VWAP, right? We've been over this here. It bounces over VWAP and we make the new high. So if we bounce above the VWAP, so we have the stop loss here, right? Our price target is still the high of day, right? So our new price target here as we're consolidating is the high of day, because we have no guarantee here. Imagine the stock looks like this, right? We have no guarantee this thing won't fall down to 35 and 36, right? We don't know that at this point in time on the chart while the day is going. But as we continue lower here, we see this and we say, okay, this is the higher high, right? Higher high. Therefore, if the buyers are going to come in above the previous low, right, and we get scooped up within this zone, right, the first area that we're going to touch is the high a day, right, which is going to be our price target, right? So this could be, you know, PT2 sell full, right? So back up here, right? And as we continue lower here, you continue and you stay in the position, and then boom, you know, you hit the price target. Whether you decide to sell the full on this candle or this candle, again, is up to you. But your stop loss is intact essentially, right? But you can have that dynamic management because there's no guarantee that this thing is going to continue to go up, right? This thing could continue to go down, right? And this could break down under the stop loss, right? But you could set that previous target at the high, right? Or you could set the target at another high, whatever it may be. But the same thing goes for the dynamic price target setting as the dynamic stop loss setting. So I don't know if this is helpful to everybody, but this is something that I do pretty much every time we're on the stream. Anytime we have a winning trade, I'm always trying to put up, and I'm not trying to force trades, right? But when I get in a winning trade, I want to put myself in a spot where I can potentially hit a 300 to 500% winning trade. And the only way I can do that is by not taking my full profit at the initial price target, because the way that my strategy works, right, is that you're not going to get 100% if you go to the previous high a day. It's just not the way it works. There's not enough meat on the bone, right? The only way to hit those 100, 200% gains is to let it to continue to ride, right? And the only way you're allowed to do that, or in my shoes, the only way I'm able to do it consistently over a period of time where I have proper risk management is the exact thing I just explained to you, with the bumping your stop loss up, you know, having a dynamic stop loss and dynamic price target while you're in the trade. So I hope that's helpful. And what I want to do is just reference the stream chat here and make sure that I get all your questions answered. Sparta, yeah, in the stream chat is perfect. And guys, thanks for joining me tonight. Sparta says the current environment is very inhospitable to swing traders compared to first half of last year. Even second half of 2021, it was better for swing trading than now. And yeah, Sparta, I think that's a big reason why I decided to do this stream today, is that there is benefit in day trading when the markets are the way that they have been. And in my opinion, what I'm forecasting the market to be during the year of 2022, which is a little bit where growth slows, you don't get, you know, massive displacement. You know, you get a lot of range bound trading, a lot of sideways action. It's not necessarily a bear market, but it's a different breed of market, right? And I think that being able to be a day trader and having that in your arsenal at the minimum, and at least the training, right? I think at the least what we can do here at Eagle is just make sure you guys have as many weapons in your arsenal, regardless of the breed of market that you decide to run into in 2022, 2023, 2030, whatever it may be. I just want to make sure you guys know day trading, Sparta, and that's the big thing. Yeah, 300% winners every day is not always feasible, Sparta, but that's what we want to shoot for if we want to buy options and day trade, right? It's a great day when we hit a 300% winner, even if we took 30% losers and went 0 for 3 in the morning session, right? Because we came out on top at the end of the day if our sizing was the same. So that's just what I want to teach today, is like, how can you guys do that? And that's such an important skill, you know, and I'm not going to say that this is guaranteeing you massive gains, but I'm letting you know if you end up getting into a runner, if you end up getting into a stock that's, you know, going to continue to go in your favor, and sometimes you get into that play, right? The only way you'll know if that's the play or not is to be able to, you know, keep that risk on the table, right? Use the strategy that I just said regarding the dynamic management and potentially profit, or potentially, you know, break even or whatever it may be, right? But that's the only way to do it, in my opinion, for this. Lion King asks, what time are you using for this scenario on Piton? I'm using the 3 minute here. on TradingView. Yeah, 3-minute here. We use the 30-second time sometimes on the stream. I know sometimes the 30-second, it just ticks faster. It just is kind of more visually appealing, I think, on the stream. But the most important time frames that I use, Lion King, for day trading is going to be the 30-second. The 3-minute is like is my bread and butter. That's what I really prefer. And then also the 15-minute, the 5-minute, and then the longer time frames are important as well. But I would say 15-minute, 5-minute, 3-minute, 30-second are going to be by far my most used time frames. Obviously 15-second, 30-second, 3-minute more for those quick scalps. But if you're looking at more of like a big short or something, I'm looking at the 3-minute and 5-minute. Yeah, exactly. Lion King, not always 3-minute, but I will post the link to our previous session on day trading. I think a lot of the stuff that I'm referencing has things that we went over in the first session, where there's a lot more of the basics on the higher lows and the higher highs. So I do understand if some of this talk here is confusing and it might feel like I'm throwing you right into things. But I do go over the exact charting setup, like exactly what I look for to identify a stock in a 1-hour basics video, which I'll send in the chat with this recording as well, Lion King. So I hope that makes sense, and it should be great. I hope we'll have them in like a nice pair there. So thanks for that question. Gary asks, how do you determine the contract to get into for day trades? This is a great question, and Gary, I'd love to use this opportunity if you guys are good on dynamic management. I know dynamic management's a big topic, so if you guys have any questions, make sure to stop me and ask. You guys can also ask me at any time. Feel free to DM me. But what we can do, Gary, is we can move on to talking about how to determine the contracts to get into while day trading. What I just look for, it's pretty simple, to be honest. Also, I wanted to talk about the different types of contracts that there are. And one thing I wanted to tell you about day trading, if you do decide to day trade options, there's a bit of a difference between a Monday, a Wednesday, and a Friday compared to a Tuesday and a Thursday. And what that difference is 0 DTE. And what I'll do is I'll post that in the chat. You guys will hear me say that all the time. And I get people's questions like, what does that mean? I understand that's like trader lingo, right? 0 is 0 as in the number. DTE is days till expiration, right? It's pretty self-explanatory. So for example, tomorrow is Wednesday, which is February 9th. SPY, QQQ, IWM, DIA, I believe, all the indexes have, and the very volatile indexes sometimes, they have, not always very volatile, but they'll have these options that expire the same day. And essentially, if you guys understand, the basics of options, is that usually the shorter the time frame, the more volatile the contract may be because there's less time on it, right? Especially when you go with like out of the money contracts, is they're win all, lose all, right? And what that introduces is that it's a little different when you trade 0 DTEs compared to, say, on a Tuesday like today, where the closest expiration you could possibly find in the market is 2/9 expiration, right? Which is 1 DTE, right? But if we trade tomorrow, we can find the same day expiration. Same with Monday, SPY, QQQ, IWM, they all offer it, and same with Friday. It's just how the market works and how the market makers and liquidity function. It may change in the future, but that's not currently the case right now. What does that mean for Tuesdays and Thursdays as day traders? Is things can just be a little bit slower moving. And what that means is that the stocks aren't necessarily going to move less like up and down. It doesn't mean that like, stocks are going to move like, 0.5% instead of 1% if they would have. That's not the case, right? I don't want to put that in your brain. But what I will tell you is that the contracts are going to move slower relative to if it was 0 DTE. So what that means is if, we're in Piton here, and let me give a specific example. We hop in the Piton entry here and say that there's a 2/8 expiration, which there's not, but I'm saying if there was a 0 days till expiration today, right? We get in the $35 call, we get up to 40, that's gonna move a lot more on a percentage basis than if we bought the Friday and we bought in at 35 and it went up to 37. Right? You're going to make a lot more percentage gain on the 0 days till expiration contract because it was just more risk, more reward, right? You could have lost the entire contract pretty much in a few minutes because it expired the same day. So when we talk about what contracts to look for, I think there's a big difference regarding number one, expiration. So before we talk about strike, Gary, I want to talk about expiration. And that's what we were just talking about, 0 DTE versus non-0 DTE. when I'm day trading, I always pretty much am trading on the weekly expirations. I just like it volatile. When things are volatile, it gives me the opportunity to hit those big gaining trades. When you see me put up 100, 300, 500% winning trades, which is not every day, and frankly, guys, it's not every week either. But usually it's on 0 DTE days where you have me on Monday, Wednesday, or Friday, and likely you're seeing a pretty substantial move up or down within markets on one of those days, and you'll see it's a field day for day traders. So essentially, guys, with my strategy, what's a day in heaven for me, while day trading is a market that's either trending heavily one direction or the other direction on a Monday, a Wednesday, or a Friday. Because what that means is I can day trade long or short with the trend, SPY, QQQ, IWM, Dow, options all day essentially with heavy volatility. And if I'm able to predict the trend very nicely and it just continues, we can see massive gains. So those are the types of days that we like, similar to how Piton was moving like really nicely in one direction. If you imagine if this was the market, if the market was moving like this, obviously it won't move 30% in a day, but it could move, 2-3% on a really nice day in the market. And if so, and we have 0 days till expiration contracts, there's so much money to be made if you're on the right side of the market. Doesn't mean you can't make good money on Tuesdays and Thursdays, but it's harder to squeeze those big profits. And I want to make that clear to you guys. And that's why some of those guys know, like some day traders I know, like they take Tuesday, Thursdays off, like if they just trade 0 DTEs because they like it. One caveat to 0 DTEs, because I hope I'm not like hyping them up too much, because it's not all sunshine and roses. PBS in chat, would you then recommend for those us newer to trading to start by not trading 0 DTEs? PB, I think that what you should do is that you shouldn't gravitate away from them because they're maybe more volatile and risky, but you should maybe just look at them with a little bit lower risk starting off. Maybe go with 1% of your portfolio in any 0 DTE position. And keep in mind, if you go 0 DTE, you can lose the entire position. Like, you need to have it like pretty much win all, lose all. Whenever you take a 0 DTE position, especially if it's like afternoon, because if the stock moves against you, heavily against you, those contracts are going to move even more heavily against you very quickly. So just keep that in mind as a newer trader. Maybe you want to start out on Tuesdays and Thursdays, so you get in, SPY and QQQ options, which give you a little bit more cushion or wiggle room. That is true, PB. You will get a little bit of wiggle room. But what I would say, PB, is that as a newer trader, do not sleep on the potential of 0 DTEs because I like some of the best scalpers I know make killings on 0 DTE options. Equity day traders. That's one thing that equity day traders I think envy a little bit is the volatility. It's volatility and it's leverage essentially you can get that you can't even get on margin accounts. Even higher like custom margin. With the volatility that you can experience with certain 0 DTEs. So I just want to put that on your radar, PB. And everybody is that, expiration is number one. You're going to get less volatility on Tuesdays and Thursdays for the same moves within the stocks versus Monday, Wednesday, Friday. One other important thing regarding 0 DTE options, guys, is that Fridays are like amazing, because what happens on Fridays is that you don't see stocks like let me just name every single big stock out there, like Apple, Tesla, Facebook, Netflix, all FANG, right? Any stock that you pretty much see, right, other than a medium cap or a small cap, has a weekly expiration, right? And what's the weekly expiration? Is Friday at 4 p.m. Eastern time. So what does that mean? That means that every Friday is 0 DTE, not just for index options, but also for a lot of stocks, right? And say Peloton here, this happened on a Friday, right? We could have had 0 DTE options on Piton getting a move like this. So I know some day traders who are like so good where they don't even go, they don't even work any day but Friday because there's 0 DTE on everything, right? And that's because they have a 0 DTE trading strategy. And sometimes you'll hit and sometimes you'll not. But say, you have any stock that's moving pretty well for you, right? You get it in the right way on the stock, 0 DTE, say it's Amazon or Tesla or Facebook, any of these bigger names, right? There's a lot of money to be made. I know some people are kind of like experts in their own stocks, right? And essentially for the same move, buying a at the money option on Friday, with the Friday expiration, it's going to move a lot more and be a lot more volatile than if you bought the same at the money option, but on Monday, right, with the expiration on Friday. So again, guys, just emphasizing the volatility of zero DTEs, the pros and cons of potentially trading them. And it's just one thing that, I want Eagle traders to be aware of. I think there's a lot of money to be made in them, and it's a lot of fun, guys. You see me coming on the stream on Power Hour. You see me and Eric will day trade a lot of zero DTEs. When we put out those trades, guys, just know the risk behind them. I took a big L last Friday on zero DTE. I lost like 50%, right, on my SPY call within 5 minutes, right? And that can just happen with like a rug pull, right? But I'm willing to lose all when I get into a zero DTE trade, because I know that when I hit a really nice zero DTE trade, I'm hitting 100 to 200% gain, right? And even more sometimes with the dynamic stop loss management. So just keep in mind, it's just a different way of trading. You're going to see more volatility. Your losses are going to be bigger. Your gains are going to be bigger. But at the end of the day, if you're hitting nicely with the high win percentage, there's a lot of margin that you can make a lot of money on, zero DTE expiration. So Sparta says you can buy SPY zero DTE for $30 and it can be 600 plus by the afternoon. Yeah, Sparta, exactly. It's just the volatility is just absolutely insane. And I hope you guys just recognize that, we do these risky things. I know other people do them, but we do have some experience in these things, and we have some successful experience in them. And we're just happy to bring them to you guys here at Eagle, because at the end of the day, you might like zero DTs. I just want to expose you to that, and the potential that there is there. And also just be aware of it, because maybe you just like a little less volatility and you want to trade on Tuesdays or Thursdays. That's another just clear thing I want to get across. So next thing for Gary is strike price, right? We talked a ton about expiration. We want to talk about strike price. So strike price, always, Gary, I'm pretty much going right at the money. It depends on my conviction. And conviction is one of the most important words that you'll see, and what, in my opinion, sets the best day traders apart from, an average day trader, right? And it's not a bad thing to be an average day trader if you're profitable, right? That's a cool thing to do, right? I respect that. But what makes the best day traders the best is, their conviction, right? So kind of what I like to do, and you might see me say this on the stream, and who knows, kind of what the exact way on the gauge, right, on what conviction is. But you could say yo, I'm mildly certain, right? That's maybe 30% out of 100, right? I'm kind of certain is 50%, right? I'm fairly certain is 70%, right? I'm very certain maybe 80%, So what is your conviction, right? And I think, Gary, based on your conviction, and that's something for you to develop as a trader over time, and you feeling out, when you have higher conviction, does it end up playing out, right? If your conviction is lower, and it plays out, I don't know, that's maybe a strategy issue, right? But you have to know about your conviction, right? So if I have 80% conviction because I get software confirmation, I get Eagle traders are giving me confirmation, I get technical confirmation and fundamental confirmation. The highest my conviction really goes on any trade is I can say I'm I feel very strongly, I did my research, I like everything that I can really literally research. I'm 80% positive. You can never, in my opinion, be 90 to 100% positive. It's very difficult to do that in trading. But say I'm 80% positive, Gary, I might look for a higher strike price with a shorter expiration, right? So a more volatile contract, more risk reward. Then if I had 50% conviction, I might go closer to the money, right? So if you look at Piton here, right, and it came down to our entry, right, you'd say, okay, Sean, what contract would I buy for 211 expiration, right? I would say, okay, if you have 80% conviction, I would have bought a little out of the money, the 38s or something, right? If I thought it was going to 100% break through, right? Because you're going to see a higher percentage gain per contract, right? For the same initial, right? So you might have, those contracts might be, say $50 a piece, right? 0.5, right? We buy 100 of them, right? So, those go up maybe 100% if we break through the high a day, right? We made a really substantial, nice amount of money, right, on those contracts, right? It was 100% gain. But if you bought, say, the 35s and we went up to 37, you're definitely not getting 100% gain on those contracts, right? But what did that mean is that if we fell down here more, right, and you had the 38s, you're going to feel a lot more pain on those contracts, right? Whereas if you're in the 35, you're going to feel less pain. Therefore, just literally, Gary, closer to the money, lower conviction. Further out of the money, higher conviction. I never really go for a strike price that's more than a little farther than like, you know, $1. Like it really depends on the stock at the end of the day. But I never really go for a strike price that's a little farther than my price target, because what I really like is when our price target hits and we go in the money. There's something about options, in my opinion, how I see them move is that when an option makes that turn from, even if it's, you know, we buy it 10 cents out of the money and it ends and it jumps up and it goes in the money, there's, in my opinion, there's a lot more demand and liquidity for that contract. And that's because it's in the money. And whether it's in the money by 10 cents or whatever it may be, the difference is that it went in the money. And that's something that I really like to see when I hop in an option. It gives me more stability, especially like when I'm not as high conviction, is going more in the money, right? So I don't really buy in the money options when day trading. I like to take a little bit more risk. The closest you'll see me go is right at the money, or even a little bit in the money, but usually right at the money, or even out of the money. Out of the money, I usually have conviction ranging from 65 to 80%. You know, at the money, I'm likely 50 to 65% conviction, right? Usually we're trying to avoid trades where we're only 50% sure on. But you know, sometimes we end up getting into trades that we shouldn't be. So that's something to think about, you know, as a day trader. So Carney asked if the webinar is recorded. So yes, the webinar is recorded. We'll post after. Yeah. Sparta says studying how to catch falling knives successfully can get you in way before the trend is accepted and not miss a big part of the move. Yeah, definitely Sparta. Yeah, confidence and conviction is one of the most important things that will set an average day trader apart, because at the end of the day, you know, I might look at the same chart as Derek, or I might look at the same chart as Eric, or another Eagle day trader, right? And I might say, okay, Piton is going up, but I'm only about 65% sure, Eric. And Eric says, hey, Sean, I'm looking at the chart. I got the software, and I feel 80% confident that this is going up. I'm like, okay, Eric, I hopped in the 36 calls for 211. He's like, I hopped in the 38 calls for 211, right, Gary? So now you can see kind of that, you know, what sets us apart, because if now the stock went up, right? You know, Eric's hitting 100, 200% gain. I'm probably hitting 25 to 50% gain, right? And what set the better trader apart is that Eric was right? Or the trader who said it was going to go up and he had higher conviction, he went further out of the money, right? So at the end of the day, I'm not really trying to sit here and say that like, oh, there's like some people are like better than others, you know, but practice can make you better, right? And improving your conviction and experience will do that. But that's what really will set apart an average and an expert day trader, in my opinion, is when you buy that further out of the money because you have higher conviction. You're right? And the average day trader will buy a little closer to the money. You might be right, but see a little smaller gains, right? And maybe the expert trader will buy a little closer to the money with lower conviction, and they'll be wrong and they'll lose a little bit less. Whereas the average trader may buy a little further out of the money. The stock goes against them and they get stopped out for a bigger loss than the expert trader, right, who went there. So I'm just trying to put that in perspective, guys, as to how you can practice and experience to become that higher percentile of day traders. And even if you're green, right, how green are you, right? We want to be big green. It's not possible every single day in day trading. I don't think there's a day trader who's successful over a period of years where you're green every single day, especially manually, if it's not like some algo thing. But it's certainly what we have to do to set ourselves in a position to succeed and backtest over, you know, not just a short period of time. So I hope that's helpful, everybody. I have a few different things I wanted to address here before the end of the webinar tonight. Overall here is we talked about zero DTE, the pros and cons. There's 3 more things we're going to go over before the end of the stream, and they're all very important. And I'd really just urge you to keep your attention, and I appreciate you so far. Is we have gap fills, pay the bills. We also have a quick lesson on ES futures, or S&P mini futures, NASDAQ futures as well. I want to show you guys how you can day trade futures, because we do it in the chats A lot of expert traders will do it to understand it and get even prepared for the day ahead. I'll offer you guys some insight into futures. And then finally, I'm going to give you guys a quick rundown on all of the, or not all of them, but some of the most active Eagle Investors day traders. Give you a little bit of insight into like who they are, exactly what the strategy is and what you need, in my opinion, in your tool belt to follow them. And I can unlock some of those things like Eric, Jim, Benjamin, Asaf, and Derek. Those are the big ones that come to mind other than myself. And I just want to make sure that you guys pay attention to what they say, because they're not only, are they great traders from where they come from, but they're also trained, by Eagle Methods, and they're trying to turn a profit for you guys and the clients in the chat with many different strategies, and it'll be really interesting to go over it. So the first thing we'll go over here, guys, is gap fills, pay the bills. Sparta, I'm glad you say you're interested in gap fills. What I need to do here is I need to find a good gap to show you guys something that filled one day. What is a gap that is filled? Let us see here. Let us see. Okay, here's a good example. Yeah, here's a great example here on spot. And as always, guys, things aren't always perfect. I don't know the stat behind gap fills, but I did hear it was very positive. It was like, it wasn't necessarily that like they always fill immediately after, right? But they, but eventually gaps are very likely to fill. And some assets, like gaps fill much more often than other gaps, right? And for example, gold futures, for example, are known to fill the gap very, very consistently, like 85 to 90% of the time. Gold like pretty much immediately fills any kind of gap within a 24-hour period since the gap occurred. I don't personally use that gold trading strategy, but I do know a trader who she does use that, and she's very successful with it. But what you can use it for is in other areas of trading. And gap fills do not always happen, guys. I want you guys to be aware of that. But anytime you see a gap on a stock, and what is a gap? This is a gap right here. As you can see, SPY is moving and moving and moving. And what's the difference between what happened throughout this time frame and this right here, right? Number one, what I can tell you is this is a cycle between 2 days here. You can see this was January 11th, 2022. This is January 12th, right? So this is the market open on January 12th at 9:30 p.m., 9:30 a.m. Eastern time, and this is the market close here on January 11th here at 4 p.m. Eastern time. What this is a gap. And why does a gap occur? Many people ask me, why does a gap occur? The gap occurs because markets don't stop. The market doesn't stop. People say, oh, did some insider person like buy up the stock or something, or why did it go up there after hours? It's because the stock still traded after hours. And I want to show you this here, is that if we go here to ES, which is S&P 500 mini futures, I'm going to go over here to January 11th if we can, and I'll show you what it looks like on ES futures. The ticker is just ES here on TradingView. We go here to January 11th. Sorry, it's taking me a moment. Yeah, exactly. Right here, January 11th, and you're seeing this. And what we can do is we can compare this here to the SPY. Let's compare to this to the SPY, and let me show you why a gap occurs. And I know it's a little messy. Sorry, guys. Just bear with me for like 1 minute. Okay, exactly. Right here on the gap. We got the 30 minutes up right here. So this is the 12th. This is the change to the 12th, and this is when the market opened and the gap filled. Okay, awesome. So right here, you guys are seeing very similar charts. This is the exact same time frame, but these are two different investment products. Okay, the first one is S&P 500 E-mini futures, and the ticker on TradingView is just ES, and then this is the S&P 500 or SPY, right? So this is the ETF. What's the difference? S&P 500 mini futures trade in different hours than the SPY. And when we go to bed here, so the market closed here. So market ran up and up and up this day here on January 11th, right? And you saw it ran up and up and up. The market closed here, right? And the market closed there. Let me identify the same spot. So the market closed here. This is the same spot that it closed, right? Now you see this gap here. So this gap is interesting, right? And you're wondering why is this gap here? And that's what we're talking about. And the gap occurred because this is what occurred here in the markets between market close and the next day's market open. And you'll look at that and you'll be like, hey, that looks like there was some profits that I could have made there. The market was going up all day. If I would have, thought that it was going to continue to go up, I could have bought that and made some nice money, right? And the reality of the situation is yes, guys, like while you were sleeping at, what is this, 3 to 6 a.m. Eastern time or something? Yeah, 3 to 6 a.m. Eastern time. I think that's like Europe. Europe was buying the markets up. The U.S. markets, the futures were moving higher. Keep in mind that when we go to bed, right? I'm here in D.C. When I go to bed, I know Samuel, one of our executives, he's in Hong Kong. He's just kind of waking up, and that means the Hong Kong, the Chinese, the Japanese, the Indian, I know I'm missing so many different global markets, but those markets and those individuals across the world, they're just waking up, right? And those of you who have maybe family in those other areas of the world, you know that it's almost a completely different schedule, right? They have their own markets, right? India has the Nifty, right? Japan has the Nikkei. I think Hong Kong is the Hang Seng or Hang Seng or something. But those markets are open, right? And there's volume, there's people moving money, right? There's billionaires, there's hedge funds, they're making moves. And sometimes, guys, there's US investors who actually go over to Europe and they or Asia, and they trade those markets while they're asleep. And similar to how they'll do that is that the futures are going for individuals who are awake or paying attention, and there's money to be made if volume occurs. And ES mini futures are a product that allow us to get exposure to overnight price action. And as you guys can see right now, and what happened here is on overnight from the 11th to the 12th here, we moved up here, right, from 4,700 all the way up to 4,730, right? So what happened there is that when the market opened, we were up, right? We gapped up. That's why the gap occurred, is because the market actually moved overnight when you were asleep, right? It didn't just appear out of nowhere up there, is because it actually moved over there, and you could have made money by using the product ES futures. You can, if you guys have questions on how to set up like an ES futures trading account, how you can gain exposure and trade these assets with us, we'll do another futures trading session, I think, next week. But just ask in chat. Myself, SAS Thunder. Thunder's a great guy to talk to. He's always trading futures. I know there's a few other people trading futures in chat as well. We'd be happy to guide you on how you can start trading them. But there's so many opportunities, and this is a prime example. Now we want to talk about the gap fill, right? So what I'll do is now that we understand why gaps occur, right, we can go and we'll talk about why the gap fills occur, right? Let me go back to this SPY. Yeah, January 11th, and here's the gap here. We'll go to the 15-minute. So gap fills pay the bills is essentially what everybody should be aware of. That's the saying. Again, it's not always the case, but in this case, this was a scenario where the gap fills paid the bills, and I think we made some nice money off of it here. Let me go here to the 5-minute. It's a little messy here. Sorry, guys. I know I'm clicking around a lot. I just want to make sure I pull it up properly here. Yep. Now, as you can see here, we gapped up from 470, right, to 473, similar to how we showed on the futures, right? But as the market came down, the price filled down to the gap. So what is filling the gap? What is the gap? The gap is the distance between the previous day's close and today's open. There's such thing as a gap down, and there's such thing as a gap up. This is a gap. This is a prime example of a gap down here, right? So the gap here, let me show you guys a gap down quickly, as we just did an example of a gap up. But right here is a gap down, right? You see this gap down, markets open down. That means they were selling overnight, right? Europe and Asia were selling. ES futures, maybe we could have shorted them for some profits. Market opens, boom, we get this big red candle, right? But the gap is there. That's the previous day's close to the open, right? And we see that, and we see the gap, and we're understanding that the gap is there. And we see the market, here, and we say, okay, what we could potentially say is that, we could buy, if we bought the 462 call or the 460 or something with the price target of this gap filling, right? And we use that thesis. What happened? The gap filled. Look at that. The gap here was filled. You see how we gapped down, but the price filled that gap, which is, again, that previous day's close to the current day's open, right? And that's a gap down. And let me show you guys an example of the gap up. Here's the gap up. Yeah, let me just get rid of the gap down stuff really quickly. So you guys understood the gap down, and then here's the gap up, right? So the gap up was 470 to 471.5, right? And what did we do? We ended up, the market opened high, it got a nice green candle, and then it came down and it actually wicked down here and filled the gap. So it filled the gap. So on the downside, so we gapped down and we filled the gap on the upside here, right? So the gap was filled. Then we gapped up here and we filled the gap on the downside here, right? So there was opportunities there. We could have, bought calls for the gap fill up, and we could have bought puts there for the gap fill down. So every single day that you see a big displacement move by futures, there's a potential for a gap fill scenario. Here's a great example of where it didn't work out. Is we gapped down right here, right? So that was the previous day's close. This is that day's open, but we never filled that gap intraday. You see how this gap was never filled here. And what do? We continued lower and lower because that seems like it was a pretty brutal sell-off there, and that gap was never filled. What do you see right here? This was an amazing gap fill. This is the day where we went. This is where the day where we went big time, guys. When the market went like 4% either direction. This was like this is the most heavenly day trading day I've had in probably a year or so. This was an amazing day. I remember it. But we gapped down, right? So we gapped down. It was like a big sell-off, Futures sold off. We continued to sell off with the gap down. Then all of a sudden the market kind of reversed here. Then we broke out of this resistance level here and we filled the gap like that. And we got in calls right here and we sold them like right here for the gap, and we made some really nice money here, right? And we shorted in the morning, then we went long in the afternoon. But again, guys, just another textbook gap fill scenario. And just keep an eye out if you're a day trader. Like, this is something that happens a lot, and if you recognize a trend, right, or you see something that you think is going to fill the gap, you decide to go in and it pays off. There's money to be made, right? And I'm not going to go too much into detail about how to play the gap, because we are running a little low on time. I'd love to talk about it a little bit more. But essentially, if you look at this day here, this is that day, right? You can see the day when we break out of this high. So we broke out of the high. So we got in the gap right here, right? So we broke out of the high a day. This is the high a day, right? We went down, we went up, we failed the high a day here. We came back down, we retested the high day, and we broke out of the high a day, right? So we made high a day, and now we're in the gap, right? That's like double confirmation for us guys to go long, right? We get the red candle, beautiful red candle. We get in our 435 calls, right? We get in our 435 calls. Our stop loss is that previous low area, right? So we're kind of willing to risk it, or it's our VWAP. Stop loss on gap fills is a little tricky sometimes, to be honest. But then we come up and boom, we filled the gap, right? And we take our profits right at the edge of the gap fill, right? So we went up, we got in 435 calls, say right around 433, and we sold them up at 437. There was a massive amount of money. I think we made 200, 300% gain just off that gap fill with high conviction, right? Because we were able to go out of the money. We were able to go 0 DTE because it was a Monday, and we got the gap fill. This is such a beautiful trade, guys. That's like gap fills pay the bills. That's like high a day, low day, higher highs, higher lows. And just like everything that you want to see, for our strategy to work out was that day. So not trying to pump it up too much, but overall, guys, like that's how the gap fills pay the bills. Sometimes I bought Super Bowl tickets from this day in the market, literally. So this was a great day, and I hope you guys remember that as well as I do. Last thing I want to do is, we talked about futures. I don't have too much time, but we'll do another stream for futures next week. I'd love for everybody to start trading futures. All I'll say on ES is that, and here are the most common futures I watch, guys. On TradingView, you can go all, right? There's you can search anything up. stock futures. If you want to look at futures, obviously click futures. They'll have some of the most important ones that come up. ES is the one I'm always tracking, ES1. You also have NQ, which is NASDAQ futures here, NQ1. Very important one to look at, especially with how bearish tech has been lately. Also, you guys have seen GE Eurodollar futures. We talked about this. For those who liked my Fed funds note and Eurodollar, here's Eurodollar futures here off of LIBOR. Very, very liquid. Fed funds is ZQ. ZQ 30-day Fed funds right here. So this is how you can trade the Fed funds rate. Another one is oil and gold. Oil is CL. This is crude oil futures on the New York Mercantile Exchange. That's where they're the most hotly traded. My cousin actually trades these and hedges like a big gas company. Essentially, it's called Rudders. It's like a grocery store, but they sell gasoline kind of like Kroger, and he uses futures to hedge their supply, CL. So there's big money in this. It's been moving like crazy. I know Sparta loves oil. Is saying, Sean, pull up oil chart, gap to 93 and gap down to 88-ish. Gap to 93, 88-ish. Let's take a look here. I know this is CL, but keep CL futures on watch, guys. These have been pretty bullish, more bullish than the market lately. Also, we have GC, which is gold futures on COMEX. I think they're on. There's so many different ways you can trade futures, guys. But gold has been moving really well here. I mean, look at gold. So there's always opportunities, guys, within futures. Gold is trading right now. You can get exposure to gold futures and look at it, it's moving. Look how it's moving, guys. Market's closed, but there's still stuff trading. There's still people buying. There's volume in the markets right now. Let's go over to ES. It's 10 p.m. Eastern time. Look at this, guys. ES is moving. We can even go here to the 15-second. And I know it's a little spotty here, but you can see, guys, ticking down here, and you see the market is moving. The market is moving. I know it's a little sluggish right now, but you'll see volume come in overnight. So last thing on, futures there. We'll do another session on it next week, guys, and I hope you attend it. Last thing I want to do today is talk a little bit about Eagle day trading. So let me quickly just reshare my screen here on Discord of my Discord, and just give me 1 second to toggle it. Go to webinar. You guys should be able to see it. Alrighty, so if you guys are on Discord, hopefully you can see my Discord. And I'm sorry if it looks a little crowded. Sometimes we have some back-end stuff on there, but I want you guys to take a look at Diamond. And Diamond specifically, we have these 4 channels. And one thing that I want to just tell you is that we really try to set ourselves apart here at Eagle by offering the Diamond membership, right? And the Diamond membership offers some really cool features, such as the live stream. Obviously the stream chat, we're on the live stream right now, and the day trade channel, and then all these different channels like commentary, etc. Something that's newer is the commentary channel, which we have Donnie, Asaf, Chart Sniper, even Dylan's posting in it with very important market commentary on futures, earnings data. Chart Sniper's end-of-day reports are just so useful if you guys are day traders or swing traders or anything. I suggest reading them in commentary. But day trades here, I wanted to walk you through some of our most popular and the day traders that I fully endorse here at Eagle Investors. So enough about me. We talked about me, but I want to draw your guys' attention, number one, to and this is in no particular order. But Eric is a newer addition with Eagle. Eric has a very similar strategy to me. I've actually grown pretty close to Eric. I really like him. It's because we kind of have a similar style. We have similar goals, and we actually like to trade together, and we talk all the time. So if you guys like how I trade, I really suggest taking a look at Eric. Eric takes different risks than me. At the end of the day, he's a different person, but I've vetted Eric. We watched Eric trade for a long period of time. We've trained Eric. We've gotten him better. He's gone through all the same stuff that you guys are going through right now, plus a lot more. And I really suggest following Eric because he comes from a great background. He can hit those big trades. He hit 100% gain on Piton today. He hit 200% gain on Snap like yesterday. or on Monday. So I know for a fact, guys, Eric can hit those banger trades, right? So keep in mind, you'll see Eric lose, 15%, 30% here and there. But when he's hitting those big trades, you guys want to make sure you're trading with Eric, because he's going to show you, how to move stop loss. You can see if you look at his trades today, such as Piton, you see how he bumped his stop loss to entry and was able to have his runners up here at 100%. So he's using a very similar strategy. The next trader I want to draw your attention to is Jim. Jim, I'm not going to get into too much today, but Jim is awesome. I love Jim, and he's going to start streaming for you guys next week. Eric is streaming first time on Power Hour Friday. I'm really going to encourage every single person to go out there and meet Eric. Get to know him, ask him questions, pick his brain as a day trader, try to better yourself and just figure out how you can follow his signals more successfully. Jim is an equity day trader. Jim is, and I don't think you'd mind me saying this, he has a 35 years of experience. He's the oldest staff member at Eagle Investors, and and he has the most experience out of anybody. And he just so happens to be a day trader and a scalper. He's worked at multiple broker dealers, different funds, and now just stays at his home and day trades for fun and for a living. And he moves big size. He was trying to short 2,000 shares of Harley Davidson today. He was trying to buy 1,000 shares of Novavax. Obviously, the guys, those aren't $1 or $2 penny stocks. That's he's moving a lot of capital, and he has a specific strategy which he'll be opening up to you guys a little bit more. What he's doing is he's doing share day trade. So if you don't want to day trade options, you don't like the volatility, you want to try something new, it's actually even maybe potentially better for beginners. I would really suggest taking a look at Jim. Jim's alerts will not fail you if you follow them properly. He has an extremely high win percentage, but keep in mind he does not trade. He doesn't get filled on a trade every single day. He'll put in his limit orders. Sometimes he'll get filled, sometimes he doesn't. But the way he sets his limits is that when he gets filled, it's an extremely high probability of paying out. And that's what I really love about Jim's trades. Keep an eye on them, guys. There's only more and more going to come with Jim. Another day trader I wanted to talk about quickly is Benjamin. So if we scroll up here, Benjamin's been posting his day trading watch list, as well as Eric. I really hope you guys are enjoying that. I know they're really putting in some extra time pre-market, to put those out for you guys. I hope you appreciate it, because they're really trying to get everybody ready for the market day. But we have Benjamin here. He's posting other kinds of day trades. This is a diverse kind of day trade, which we're bringing to you. Is that you don't just have to day trade by buying stocks, right, or shares, or shorting shares, or buying a call or buying a put. You can use spreads, right? Or you could sell a call or sell a put. And one thing that Benjamin is doing, he does a credit spread. And in this case, yesterday he called a bottom within the market around the afternoon where he sold a put credit spread. And for those who've traded spreads or been a part of our spread strategy education sessions before, you'll understand that he's essentially selling the puts, right? So what Benjamin did was he made a nice risk reward on the spread, where he sold the puts to the buyers at pretty much the low of day yesterday. And what do you know, the market just went up since he called that bottom, and he got 90% profit on the collateral. So he made about $60 profit per the $500 on the spread. I know it wasn't too much, but it was it was very consistent, and it's just another way to day trade. So keep in mind, Benjamin, guys, is using a different type of strategy, and I'd really suggest trying to give him a little bit more traction. I think he's kind of underutilized, I feel, in terms of people using his alerts, because he doesn't say much, but when he does, it's something it's like Jim. Just make sure you pay attention to it, because he's going to either be calling kind of a top or a bottom within markets. And in this case, if we saw this put credit spread and we saw that Benjamin was selling puts, we could have bought calls on SPY, and we would have made a lot of money. So it's just another indicator that we could use. Finally, guys, we have two other day traders, Asaf and Derek. They haven't been posting too much in day trades channel here. I know Asaf's been posting every so often, but Asaf has a really good mix here of buying options as well as spreads for day trading. Just keep an eye out for Asaf's trades. I know Asaf's been with Eagle for a while, and there's many people who look at him for kind of market internals and spreads. He's posting some day trades as well. I'm sure he'll give you more information on his strategies. I won't cover that too much on the stream. Finally, we have Derek. You guys know Derek. Derek is more of a quick scalper. Derek is going to go with the trend. He's going to go with the price action. He's going to go with what he sees. Derek is moving big size, guys. Derek has a larger account than me. Derek's trading with over $1 million account, and he has he's trying to he started at like 50 grand and he was able to make it into $1 million over the past couple months and year or so. Trading with Eagle investors, learning, etc. So I would really suggest kind of looking at Derek as a great role model within the community, because Derek started out, guys, as a Diamond Pro member. Just like everybody else, he was able to find success with day trading and scalping and swinging with his strategies, and he was able to really find success. So Derek's a great member of the team. Exactly, always, Mikey. Yeah, Cali Death, exactly. Yeah, and I know for a fact it's verified. I work with Derek all the time. And Derek's been very successful. He has a completely different strategy than me, but I've learned a lot from Derek. Derek has taught me to jump on a trend quick. If you guys were in the SPY calls for Power Hour, the trade that I made was like a Derek trade. That was like a Derek style trade where we weren't at high a day, we weren't at low a day. We were at VWAP and we saw some buyers step in, and we just decided to go with the momentum in the short-term trend, right? And that's what we did. Derek likes to trade like that. I totally respect it. And he hits big, and he's been successful that way. The market is sometimes good for that, sometimes not. But if you are looking for those, good trade ideas, Derek hits big, guys. Like Derek will lose on some trades, but Derek goes big or goes home, and if you got, and I know people like that, newer traders, it's not always the most, newer trader friendly, because newer traders might think, oh, it's like a safer play or something, right? Whereas, Derek might lose an entire position overnight, or he might lose it quickly. But on the end of the day, I've seen him make 300, 500%, like we were talking about earlier on day trades, swing trades on oil, crypto, tech, healthcare, you name it, and Derek certainly knows his stuff with fundamentals of companies, as he works closely with executives across very large companies with his position at a bank. So that's the situation there, guys. I hope that makes sense. I just wanted to give you guys some more information. I told Jonah to schedule this stream, so number one, it could be recorded. You guys could get some more information just to help you with following these streams, because I just want to keep doing them, because I feel like a lot of people are liking them and attending them and hopefully making some money off of them. So the best thing we can do is build on a positive and continue to move forward, and hopefully it can help as many people. I really appreciate your time, guys. I really need to make an announcement regarding the new channels, guys. We have some new channels out. I don't know if you can see them, but if you guys can see Dark Pool, can you guys see like Dark Pool? Can you see analyst grades, and can you see insider? Can you guys see those new channels? Because if you can't see them, I still got to open them up, but I'm going to make an announcement. They're new channels we added. We have a nice partnership with a data collection firm, TradeEtics, which we really like them over there. But we have some data, Dark Pool, analyst grades, insider. Feel free to mute those channels. I have to make the announcement. I understand they're like rapid fire. Feel free to just go in there and mute them if you want. But I'm going to make an announcement just talking a little bit more about them. Also in the OptionBot channel and Diamond, guys, we recently like upgraded to their brand new like Ultra Server Premium thing. And it has some new commands and stuff. I know Thunder was asking for it. So Thunder, if you're on the call, I hope that's helpful. And I'll send another announcement out about it. Guys, there's a big announcement coming out on next Monday. 2/14 is the tentative date. I'm not going to provide any further details. Some of you may know, some of you may have a general idea what it may be. Others may not, but it's going to be a really big deal for Eagle. I'm really excited. It's been in the works for close to a month now with all hands on deck. So that's awesome. Yeah, Garnet, awesome, man. Thanks so much for your time tonight, guys. I appreciate it. Again, guys, the stream is recorded. As soon as it's done uploading, what I'm going to do is I'm going to send an announcement out with the first day trading strategy session recording, as well as this strategy link recording, kind of part 1, part 2. I know we're a little bit all over the place, but for those who came and reviewed the first session, I'm sure this was a good build off on that, and hopefully I was able to help you guys out. I'm grateful you guys taking your time out of your evening to come and listen to me. I know I'm not always the most exciting, especially out of market hours, but take care, guys. Cheers. Have a great rest of your night. I'll see you for the Monday. I think I'm on for tomorrow morning too. So I'm kind of live and breathing the live stream. Since Power Hour, I'll be on tomorrow morning at market open. So I hope to see you there for some fire day trades where we can utilize these strategies real time. I hope to see you there with us, and we'll make some bank, guys. Take care. Peace.